Well, it was a wild week on Wall Street, wasn't it? With stocks way up, way down, all over the place. Why? And is America still the best place to invest? Let's bring in Wall Street Journal columnist Mary Anastasia O'Grady. 3.7% annualized growth in the second quarter of this year. Start of a big new expansion, Mary?
Well, it's a great number, and I'll tell you why it sounds so great. In 2008 and 2009, we had a recession, right? We had a big contraction in 2009. In 2010, the economy grew at a measly 2.5%. Since 2010, that is 11, 12, 13, and 14, we have not had even 2.5% growth. In the first quarter of this year, we didn't even make 1%. So the 3.7% is a fantastic number. It puts us at 2.2% for the year. But I'll tell you, Stuart, there are very few people who think we can keep that pace going for the rest of the year.
Wait a second. You don't think you can keep 2.2%?
No, that we can
keep
the 3.7. In fact, what's expected is that we're still going to come in somewhere in the 2% range, which is not enough to satisfy the huge number of people that we have unemployed or underemployed, and to start to get the economy back. We should have had a very strong rebound off of such a big contraction. We never had that. So I would say that the economy, we're happy about this number, but I don't think we should overrate it. The bottom line is that the Fed is still keeping interest rates very low, and it can't do what we need done, which is actually tax, trade, and regulatory policy being more attractive to investors.
Okay, James, is America still the best place to invest?
Well, I'm feeling more optimistic after this quarter because, as we said, it might be the way of a few years in a row here where we'll have a great quarter and then we're back to kind of the Obama era new normal of 2%. But what's interesting here is you have low oil prices, which a lot of people in the markets don't like if they were betting on higher prices, starting to really exert themselves, help the economy. You see consumers buying bigger cars, driving more, consumer spending coming up, also business investment, which has been lagging. So the consumer and the business person are more confident now. Maybe that's because they're seeing the light at the end of the tunnel, the ultimate end of the Obama presidency a year and a half from now. But
everywhere else is slowing down.
Yeah,
China's slowing, Japan's recession, Europe's recession. I mean, I hate to say it. Are we the prettiest horse in the glue factory? I know I shouldn't say that kind of thing, but I said it.
I think that has been, best house in a bad neighborhood. That's been the story for a few years. But let's not underestimate the power of a $2 gallon gasoline to get consumers fired up and spending.
Okay, John?
Well, Stuart, when you say, is America the best place to invest? I mean, what are you suggesting that they invest in? In other words, if you're a business, sure, there's places to invest. If you are on Wall Street, a banker, or if you have a substantial amount of money, it's great. Maybe America's a great place to invest. The Federal Reserve has been running essentially 0% interest rates for nearly 6 years. If you're an average person who normally invests in things like certificates of deposit or have your money in you're making no money at all. And then, so the zero-bound interest rates drove a lot of these assets, money, into the stock market. The stock market has indeed risen. And then you have a week like the one we've just been through where you go down 1,600 points over 2 days, and these poor people are sitting there going, what have I gotten myself into? This partially, in my mind, Stuart, really does explain the Donald Trump phenomenon. There are people out there who are just kind of normal, average people who feel that the system is out of control. Why have they not been able to invest in the normal way that they always had in their lives the past 6 years? Because the Fed didn't want them to.
Mary?
Well, if you look at what happened in 1937 when the U.S. fell back into recession again, the main driver of that was an administration that was hostile to business, that whether it was on taxes, regulation, trade, it was against investors. And I think that message has got to change. I want to have the optimism that James has, but it doesn't change all of a sudden because you finally, catch up to 2.2% growth. It has to change by policy initiatives on the part of government.
It has to be political change that introduces economic change, doesn't it, James?
Yeah, and I think if you look, you could say we've started to see a turn, starting with last year's election. Maybe the war on business is starting to end. Now, again, it's early days, but what's different about this quarter is that it suggests as opposed to a lot of the market activity lately in the last few years where people look to the Federal Reserve and China to pull the world economy. You have a sense that maybe we're getting back to what should be the normal, which is the U.S. economy leads the world. And that's what we're hoping to see.
How can you possibly sit on and restrict the great American private enterprise machine for another few years? You can't do that, surely.
I've been listening to Hillary Clinton, and it sounds like that's exactly what she intends to do, is continue the war on business.
On that note, we'll end this little segment. Thank you very much, Henninger. Still ahead, they're the driving force behind a nationwide campaign to raise the minimum wage. But now some unions want an exemption from paying their own members that high rate. The full story after the break.